Welcome, everybody, to this episode of Blood, Sweat, and Balance Sheets. My name is Stefan van Duyvendijk. I'm your host today. Joined with me by co-host Mike Whitmire, the tri-true legend of FloQast. And today we want to go over 2025. 2024 was such a huge year. There was a lot of things that were going on, not only in the marketplace, but new adoption of technology. And I think a lot of people have this sense of urgency because 2024 turned out to be kind of a crazy year. We had a lot of new development technology, a lot of new adoption technology. We saw a lot in the news around talent crisis, right? And we see a growing demand for changes within the organization, whether that's transformation from the CFO or just the broader accounting team and what's going on. So there's just a lot that has occurred in 2024 that's pushing into a really, what I think is going to be robust 2025. And I think there's a lot of question marks around where that's going to be. So we want to kind of give you our predictions so that you have maybe a couple places you can kind of pin and chart your course to, and we'll see how it plays out. But with that, Mike, let's hop into it.
Let's do it. Very well said. I'm excited you're the one hosting today.
Yeah. So, I got to do one here and there, stay in there.
Spread the love.
Yeah. So the first one I want to talk about is the talent shortage in accounting. So this is something that has been developing way before 2024, but I think we're really coming to a head in 2025. I think we saw enough kind of things percolating in the news in 2024 that's suggesting a bigger crisis is going to happen. So just some things to call out. We had Tupperware had to delay their annual financials because they didn't have enough staff to get it done in time. I think it's Advanced Auto Parts had a material weakness because they didn't have the right technical accounting staff on hand, and so their firm issued them a material weakness, which is a wild thing to happen. It was crazy enough to see Tupperware had to delay, but then to see Advanced Auto Parts literally assessed with a material weakness, like audit firms do not like to do that. That is a last minute resort. That's usually years of conversation in the happening.
And generally a material weakness is like a point of failure with one control. You're not throwing an entire team under the bus and just being like, we don't have the technical staff able to handle this. That to me was sort of the wildest part of it, was the reason they gave behind it.
Yeah. And it wasn't the one control is missing. They're almost suggesting the entire environment was not suitable for financial reporting, which is just a crazy thing to happen. And I can't imagine that, this is a public company, so they're held to a higher standard, but usually what you see going on in the private companies is happening in a lot of private companies. It just hasn't been assessed or disclosed. Yeah. Right. So we're not going to see that in the news, even if it's happening. So, one instance actually is like more indicative to me that there's a lot more of this going on, and public accounting firms are kind of had enough. They feel like there's too much risk for them not to come in and assess that weakness. Yeah. And, we did our own analysis on this, right? So we went in, we looked at Bureau of Labor Statistics, we looked at AICPA data, Department of Labor data. And when we looked at 2025, our internal estimate of the deficit of just CPA, so we're just looking at CPA as the technical accounting staff within the organization, we estimated $160K professional deficit out there just in 2025. And this has been growing, for a while. But it's kind of crazy to think about that. Is this something that you're hearing in conversations with, some of the customers you're talking to? Is this something that we even internally are struggling with?
Yeah. Well, hiring's always tough. We hire accountants and put them into new roles, so that's a different hiring process. But
so you are the problem, Mike.
I am. I'm part of the problem. No, that is a very funny part of this as we talk about, accountants are leaving the profession. We are guilty of that. But I would argue little old FloQast isn't causing the 160,000.
Yeah, if you don't know, we don't have 160,000 employees yet.
We do not. Yeah. We're working on that. Close to 1,000. That's kind of cool. But we've seen that when I talk to other CFOs and controllers about hiring. It's a big challenge for them, and a lot of them are starting to staff up again because hopefully 2025 here is going to be a good year for growth, IPOs, all that good stuff. There seems to be a lot of bullish sentiment from the bankers, the lawyers. Lawyers are ramping up heavily, and they're sort of the tip of the spear on we're getting ready to do this work. I know private equities out there trying to get as much money available as possible to do as much M&A before the IPO window opens up. So we're in this really fascinating time in capital markets. So everyone's trying to hire accountants, and when you talk to those companies, it's like, oh my gosh, I'm so struggling to find staff. It's really tough, and you have people quitting for being overworked. So it's like a continuation of the problem that we've been talking about for probably 2 years. I've been thinking about it more. This is an issue we've buried our head in the sand on, I think. Yeah. So we kind of talk about it. A lot of it, I feel like it's the federal deficit as well. Like you can compare this to our budget in the United States. And what's happening is we've all kind of known it's a problem. We bury our head in the sand on it, whatever. And now we're at a point where we're paying more in interest than we are for our military.
Yes.
And then it all starts to become a compounding issue. I feel like our equivalent in the talent shortage world is that gap is so bad that now people are leaving at an accelerating rate. People are not majoring in it at an accelerating rate, and we've just waited too long. And I don't know how we solve this problem at scale.
And that's where, we've talked in the past about the 150-hour rule that NASBA and the AICPA are walking back, right? And, what I find this goes back to, I think 1983 is when like the first 150-hour ruling came about, and it was actually Florida that said it, which from my understanding of Florida was like a little wild, but Florida like led the charge on that. And then by
the lowest regulated states doing that.
Yeah.
It's kind of a fascinating contrast.
Yeah. Florida, always keep them guessing. That's how they like to live their lives. So, and I respect that. And, but it started in 1983 where they started pushing for this. And I think by early 2000s, like almost like 30 of the 50 states had pushed that same ruling. And then in 2015, all states had the 150-hour ruling. And that was really pushing against it. And now we're trying to really walk that back to try and recruit young professionals. And I think while it's nice, and I think it's a step in the right direction, it's not a comprehensive solution to the problem, right? There is a greater kind of failed promise of the profession that's occurred. And until we really figure out a way to solve that, a lot of people are going to look at this career and say, that's not really the viable career that I want, or that's not really something that's going to give me the I guess like the competency, the lifestyle, the happiness I want in my life. And so, you're really never going to catch up with what we are currently doing.
Yeah. No, it's again, I think we've waited too long to address this, and it's frustrating because this topic around the 150 hours, I think, is a really important part of it. And at FloQast, we've been talking about that for 10 years.
Yep.
I'm like, we've been on podcasts for a decade at this point, talking about how we need to get rid of the 150-hour rule and move it back to 120. Like, imagine if we had made that change 10 years ago.
Yeah.
How different are things right now? I think they're pretty different had we actually acted on this. And so it's nice to see these changes being made now, but is it just too little, too late? That's where I get concerned about it, and that's where I feel like FloQast, we have a responsibility to try to plug this talent gap. That's been one of our big focuses.
And to your point, it's created a vacuum in the marketplace, right? And the vacuum isn't going to be solved by this one. Again, it's a step in the right direction, but it's not really going to solve the bigger thing. There's going to be no immediate impact to the profession. It's going to take probably a decade for it to really materialize into anything that's useful for the industry. And so there's going to be an existing vacuum to take place. And we've already done as much as we could with process to kind of shore that gap. And I think what we've done for the most part, we've just thrown the workload onto the existing professionals, and we just have them working more, doing more work, demanding more from them. And where possible, we've thrown it also onto the back of technology, trying to get technology to do more. But the people really don't have any more capacity. The processes really don't have any more capacity. So you have to essentially rewrite the rules, and you have to plug it with, you have to fill that vacuum with technology. And I think we're finally at a place where not only FloQast, but just the market in general is actually coming out with technology that can solve that.
Yeah.
We're imminently in the space where we can solve that, especially with the advent of generative AI and its adoption to the industry.
Yeah, exactly. And I think that was one of the big developments of 2024 is the LLM technology came out. There was some promise behind it, but I think 2024 was the year where it was really developed on, and a lot of companies like FloQast kind of came out of that thinking okay, we have a really good AI solution for handling a lot of these problems. And so part of why I'm so excited about 25 is that stuff's in the bag now, and we can take it out to our clients and hopefully drive a lot of efficiency and help them go home at a reasonable hour, maybe make people not want to quit as much. And I would argue if you have the right tech stack, it becomes a recruiting advantage for you.
I think so too, and I think it's one of those things where the promise to accountants is, hey, you can be this strategic asset to your organization. You can be this key player that really changes and impacts your organization. But then you get into the profession, and you feel like you spend a lot of your time just plugging away at kind of mundane tasks, trying to maintain the status quo. Well, we need to get these reports out so someone else can make the decision. I don't have time to look at it, assess it, provide any color. I'm just a doer, right? But what we've been promising from this industry is no, you can be involved in this, and the organization wants you to be involved. And all indications kind of tell us the organization does want you involved, right? the fact that CFOs are moving, which is kind of the next thing we want to talk about, the fact that CFOs are moving into more of a transformation role within the organization is signaling that, it's not just the CFO. The CFO doesn't do things alone. He does it they do it with a team. And so the team itself needs to be more in a transformation mindset and a transformation role. So, to me, there's a lot of indicators that the promise of wanting to be in that strategy role exists within the organization. It just doesn't exist within capacity. And so generative AI lets us get there. Right.
Yeah. One of the interesting things I've noticed over the last few months as I've been speaking with customers and prospects about all this and the notion of the strategic accountant, like we talk about that. I think it's good marketing speak and is good if you're a current accountant and you're trying to make a business case for why this makes sense. I think that's a good way to talk about it. But what I've realized is I think most accountants are really just interested in being able to go home a little bit earlier.
Yeah.
It's not like they're so overworked. It's not about repurposing the work such that I can do other things. It's about eliminating the work so I can go home at a reasonable hour.
Yeah.
And that's been quite an epiphany for me. I'm trying to, in my gut, assess like what percentage of accountants are more interested in, reallocating so they can be strategic and presumably move up in the world of accounting and ultimately, like have a really super successful career, CAO, CFO, whatever. Versus how many people are in it because they like a steady paycheck. They don't want to work a ton of hours. They just want to be home, spending time with their kids. And that's great. That's an amazing lifestyle. And so, I don't know, that's just been something that's been in the back of my mind as I've been speaking with more.
Do you think it's a little generational? Different generations kind of desire different things from their career.
No, I think it's a personality trait. It's just what's important to you in life. Is it money or family?
Yeah.
And different people have different takes for different reasons on that. And it's either one is great.
Because I do definitely think when I look at younger generations, and I think this is a good thing, they do weigh the pros and cons of wealth to actual happiness within their life. And they're willing to say okay, well, I really just need to hit this spot to be and do the things I want to do and be happy. And, I'm going to ride this wave for a while before really trying to level up into this different area. And I think that's good. I think it paces you out a lot better in your career and gives you a much better realistic expectation of what's going to occur within your career. But to my POV is I've seen a lot of the younger professionals have that mindset where, that's something that I had to develop, in my career. Cause originally it was well, no, you hard charge until you hit the wall, you know?
Yeah.
So an interesting, kind of an interesting look at it.
Yeah. When I was assessing my career, it wasn't about work-life balance. I was fine grinding all the time because I wanted to, move up and have that opportunity. So I wasn't, that really wasn't my focus, but this is pretty cool. We kicked off. So we partnered with Big Brothers Big Sisters as our charity. Just last night we had our next kind of session kickoff. And so I got to meet my little brother as part of that process and go through it. This kid's in 11th grade and I'm shocked at how just cerebral and thoughtful he was about his career and the future. And he's doesn't know what he wants to major in, is debating it. When we were talking through this stuff, it's as much about ROI on degree versus life satisfaction versus where's the world going and what's the right decision to make. I was sort of taken aback by how thoughtful a 16-year-old kid was about where he's going in his life.
Walk it back some.
Yeah, I'm dude, gosh, this is not how I was thinking when I was 16. So I don't know. I think, generationally, there's just more access to information. I think it's better understood that just because you're a millionaire doesn't mean you're going to be happy. A lot of rich people are really sad and depressed. I heard someone tell me, if you're sad when you're poor, you're going to be sad when you're rich.
Yeah.
It just kind of is what it is. And so I think there's more of a recognition of that. I've been, really, really impressed with the Big Brothers Big Sisters program and just kind of how thoughtful the kids are despite being 16. And I'm curious. AI and automation is top of mind for them when they're thinking about what careers to move into. And so in the accounting world, that's something that we need to be cognizant of as well.
And not to stay on this topic too long, but it really, I think they also probably look at AI and what it can do and the applications of it so much differently than we do, right? Because they adopt it in such a more native way than we do. It was a struggle for me originally to work with AI until I realized, well, if I can onboard a new staff, I'm pretty sure I could onboard AI, right? It learns just about as effectively. So, it was a bit of a learning curve, but once I got there, I got comfortable with it and it's great. But, younger generations just adopt that so much more natively. And so it'll be interesting to see even how, they're probably concerned about things we haven't even thought of with AI yet.
That's more. And I think they're concerned because from their lens, they've never actually like worked in the real world and don't know what the day-to-day of a professional is like. And so you're just hearing this abstract idea of jobs are going to be automated. So is that a good idea to do that? Like, he brought up concerns around computer science being automated. And so should I major in CS? And it's like that, imagine saying that 10 years ago, that's not how everyone was thinking about it. So it's really, there's like a lot of things they're considering at this point, and I don't know, wild. Yeah. Not a generational thing. I think it's like more.
Well, to your point though, there's a lot of accounts out there that just want the work-life balance. Step one is achieving the balance. Maybe step two is looking at themselves and having a greater impact on their organization. But step one, at the very least, for a lot of these people, is saying, I just need to have the balance. I cannot maintain this. And that's why, again, we're seeing people outside of retirement, a lot of individuals in the, I think it's like the 32 to like 44 range are just leaving the profession, right? They're just walking straight out of it. And I mean, we even look at our own recruitment internally. We're able to hire a lot of brand new accountants here in BDR roles because they get into the profession and they're immediately like, oh no, I don't like this. Or oh no, this isn't the right fit for me. Maybe it's a better way to say it, but they're walking out of it pretty immediately. And then we see a lot of people, in our generation that are like, I've tried to maintain this for 15 years and it's just not doable and it's time for a change. So again, there's a market vacuum. It needs to be filled. What are your thoughts on other ways to like solve that? So, I mean, we have a kind of a hard stance here that we think technology, in particular AI and the use of it, will help fill that need, but other things that people can do to kind of fill this vacuum within the organization.
I think you're going to have to look at hiring outside of accountants actually, and start to train people into it, which is something that one of our early customers still working with us, Jerry Raphael, would talk about this a lot. He liked to hire, he would call them athletes or swimmers, people you could just kind of throw into the deep end and they'll figure stuff out. I do think if you find smart people and spend some time training them, you can get them to like do some of the sort of basic work. And then if you can arm them with some technology, then you're at a point where they can learn about accounting, the day-to-day, how it actually works, and then give them technology to automate it. And then they have kind of the brain to understand accounting and apply technology the right way. So that's sort of like one option that's out there. Obviously deploying tech is going to be a big one. And like offshoring is going to continue to be a thing. It just plugs the gap when you don't have an option.
That said that offshoring, that maybe like 8 and 10 mid-sized firms had not even considered offshoring, right? And or outsourcing, I should say. So it kind of it has both of those aspects in there. And then this year in 2022, and that was 2022, and then in 2024, it was something like 38 to 40% had already outsourced. So they went from never even considering it or ever really wanting to think about it ever to fully adopting it. And a lot of them had fully outsourced their accounting and finance staff because it wasn't maintainable. And we can see that in a lot of firms where I think CAS is like the number one growing specialty for firms, right? So that's another way that people are like having to adopt that.
I mean, even... Yeah, because it makes sense. If you go to a CAS firm like Client Accounting Services, or at the higher level, they go by BPO, right? Business Process Outsourcers. Like we've been talking to Big Four, and they're spinning up big BPO practices, and they have large clients just wholesale offshoring or outsourcing accounting to them. And I think the general take, if you're a CFO that's trying to maintain a team of like hundreds of accountants, are just like, gosh, this is so hard to hire. Like, I don't want to deal with this anymore. And then EY or whomever on the Big Four side can focus on, all right, how do we get this rote work done for as cheaply as possible using offshore resources and technology? I think ultimately technology is going to win the day on that one. So to me, the major job market that's going to be impacted by technology is the offshore job market. Yeah,
particularly offshore, not just outsourced, but the outsourced is going to be heavily impacted. And I think it's just because people really struggle to maintain the ROI that they anticipate when they go to the offshoring option. It's just, I think on paper it looks great, and then when you go to support different kind of reporting needs, it just kind of falls apart because they're so disconnected from the greater organization. Even though a lot of the work maybe funnels through them, it just kind of falls apart when it comes to reporting. So, but yeah, I agree. I think upskilling is a great thing. I love the idea of swimmers. I can in my time as a controller at 2 different companies, some of like I would actually say my best accountants didn't have an accounting background. They came from non-accounting, but they just took to it and they really knew it. And one of them actually went on to get his CPA.
Nice.
Because enough of us were like, you're really good in this and you're sharp at that. And he went back to school, got his Mac, or maybe he got his MBA, but he went back, got his 150 hours, and then passed the CPA exam probably 2 years ago. I think,
that's awesome.
Right before COVID, he passed it. And so just it goes back to, it's like you need to look to upskill, kind of the talent you have on your bench and be creative with what you have. But the issue being, as we saw with Advanced Auto Parts, firms are going to be really questioning that ability for you to use, non-technical staff in a technical supporting role. So you're going to kind of have some regulation pushback on that one.
I think it's important to know, like, there are a lot of people you can bring into the profession. They're quick studies, learn this stuff. Honestly, you can go to YouTube and learn a lot about accounting these days. Like, you could probably spend a week on YouTube and be an accounting 101, 102 expert and provide value within an organization. I kind of think it's like at that point. But yeah, if you have someone who is good at that naturally, they just get better in it, they grow within their career. Ultimately in accounting, you're going to win on merit. Like, people aren't going to look back and be like, oh, you didn't major in this. If you're really good at what you do, you'll find the boss who recognizes that. They'll get promotions. If they go to a new company, they'll pull you there with you. You'll have the controller title, whatever. You'll be fine. So I don't think.
Yeah, no one asks you what college you went to. Like, once you're in your career, no one's like looking back to be like, oh, what college? What was your GPA? Or what Big Four did you work at? Oh, you didn't. Like, people stop to care because they're going to look at your references, and if they're stellar, then you're good to go.
Yeah, and
that's the best way to hire.
And we talk about CPAs a lot on this podcast, which is part of why I want to make this clear. I don't think you have to be a CPA to have a really great career within accounting. Still,
100%.
You can still get promoted. It's a nice to have. It's great. It's like makes someone like me know, like, okay, you can be dedicated, you can work hard, you can focus, pass a difficult test, all that kind of stuff. But at the end of the day, your performance on the job matters more than that. And as long as you're performing in the role, self-study like totally works. You can do that. You don't have to get your 150. You don't go into student loan debt. As long as you're delivering day to day, people are gonna be thrilled with that.
Yep, I 100% agree with that. So that's something I think the industry needs to take, into more consideration is do you have a culture of like growth and development on your team? And then you're gonna have to have technology to like help back you up. Because I do think the demand within the organization is rapidly outpacing what you can upskill internally. But it is a good take.
And a side note on when you take a risk on someone, coach them up, give them that effort, put them in a role, they'll be grateful. They're more loyal. You'll have less of the turnover. And so your talent crunch issue within your organization is not going to be nearly as bad as others. Yeah. Like, I guarantee you, if you have a mentoring program like that, you have a higher retention rate than your average accounting department.
Yeah. Especially with the burnout we're seeing in these accounting departments. So we're kind of leading into this earlier. I want to go back to kind of the notion of the CFO being pushed into more of a transformation role within the organization, and not just necessarily financial transformation, though that is a key thing we're seeing. I think it's really being pushed into this broader idea of transformation within the organization. And we're seeing a lot of organizations just, it used to be the CIO and maybe like, an EVP of something else were in charge of some big transformation project. And now we're seeing a lot of CIOs but wanting to partner with the CFO to kind of drive a lot of these initiatives. And and that can be anything from like modernizing workflows, adopting new agile tools, or, centralizing data and kind of like streamlining decision-making, reporting, or whatever it is. But we're seeing a lot more demand of that. Again, is this something that when you talk to our customers, or even when you look at the way we structure our organization internally, you're seeing a trend?
Yeah. Yeah, absolutely. And I think it actually starts with the budgeting process. You go to do your annual budget. How many heads did everyone request for the next year? What's the expense request and all this? And then it comes back really big for the CFO. You're like, oh my gosh. And then the board's pressuring you to do things more efficiently. And so you turn to, okay, well, I can't improve that headcount. What can we do to automate it? And then it's like, how can we scale more with doing less? And we're at a point where if you're going to do that, the only thing you can do is technology and transform your company. And so you as a CFO, to make sure this can actually happen, you're going to then go partner with the tech side. Maybe you'll have IT rolling up to you. A lot of organizations, that's the case. Or you partner with the CIO on the separate side. Like, all of a sudden, to actually hit those expense goals that you're talking to the board about, you need to become more collaborative. And there's no more firing of people. Everyone's cut to the bone and overworked already. The CFO, it used to be easy, like, oh, cut a bunch of headcount and HR can deal with that. Now it's like, no, we got to work together and figure all this out from an automation perspective. Yeah. And so I think that's the overall budgeting process as driven by investors today, I think is kind of one of the factors moving CFOs into more of this operational role.
That's an interesting take on it, because I think that's something that Well, and I don't want to jump into another point I want to make, but you do see investors reward organizations that have robust reporting, like public market robust reporting. Investors tend to pay more money for, and we've seen that in organizations just that have the best reporting just in capital markets tend to be able to demand a better share price than ones that don't.
Yeah,
and that's not just if they have material weakness or not. It's just like if they come to the street and they're prepared, they feel more confident in the investing.
Well, in
our
world
as well, with they're wanting, like, your boards are wanting more and better information from you.
It's well, I'll toot our own horn a little bit. We've always been very good about reporting, despite our size being little old FloQast. Like, we have a ton of information for the board, for our new CRO Josh. He was like, your BI process is like way better than we had at a public company. So we're like pretty robustly built out from a financial and accounting systems perspective. It's more about when we go, and this is to our software as a service world, there are certain metrics that we focus on, efficiency metrics. And now when we're presenting those to the board, it's like, how can we improve those? It's not about the reporting on them. It's about the actual improving on those metrics. And a lot of them are so high level company wide that the CFO, by helping with transformation and operations, can drive that number. So like for us, for example, it's looking at the highest level is how much net new ARR did we add versus how much cash did we burn, right? Just a net new ARR to burn ratio. And if you're a CFO, you can work with other teams to reduce that expense. Like, maybe you can make your go-to-market more efficient and book more revenue and spend less money. All of a sudden, you're hitting both sides of that equation and you're making the metric look better. I think that's the difference. Is it used to be CFO is just like, here's the metric.
Yep. Figure it out.
Reporting on it. Now it's like, okay, CRO, CEO, COO, like, here are the metrics. What can we do to make this better? We got to present this and actually improve this number. So it's a different mentality.
Yeah. And you're seeing the boards like actually asking into like deeper and being like, okay, what is your plan for this, and how does that actually impact this number? Not just, hey, do you have a plan for this? Yes, no, or like, yeah, that seems close enough. It's like, what is the specific plan to impact this number?
Yeah.
And that makes sense to me. And I think the other thing that, when I talk, I go to a lot of conferences and I talk to a lot of people. And one of the things I'm noticing on another aspect of why the CFO is being pushed in this realm is there's a lot of data within organizations that didn't exist even like, we'll say 10 years ago.
Yeah.
Because we're adding so many really specialized point solutions in the space that are so much better at getting information from consumers, from vendors, from wherever that source is, that we have this like huge pile of extra data that we have that isn't necessarily true financial information. And then we have a lot more financial information as well. And so you have the CIOs that are trying to manage all this other data and report that to teams. And you have the CFO that's trying to report just specific financial information to teams. And I think there's finally become a consensus that these two parties need to like work in cohesion to present just a complete picture to the end decision maker, right? In whatever department, in whatever role it is, whether it's a low-level manager or high-ranking senior leadership, they shouldn't be getting the information from kind of two different sources. They want to kind of centralize that and speed up the process. And I think that's another area that is kind of coming to a head is how do we merge these two pieces of information? And I think that's a lot of why even things like the climate disclosure, and I'm not having a take on whether it should be around or not, but I think a lot of the impetus on where it comes from is investors want more than just the basic financial information. They want a more complete picture and view. And so that requires the CFO to step out of their normal purview to gather that and work hand in hand to kind of, compile it together.
Well, yeah, and in investors, if you listen to earnings calls, and I'll just focus on SaaS for a little bit more. You present all the financials via the financial statements, and so oftentimes the discussion is more around other metrics, company-wide things, operations, and so the numbers are important. You want to get that out accurately, but investors just kind of assume that's table stakes, and then they dig into more metrics and really the forward-looking stuff, like what are the market landscape developments, where's the product development at, what's the customer, are customers happy, what's the competition doing? There's a lot that goes into it. And I'll say for the kind of, let's call it combined reporting, where it's information from different departments coming together to form something. Yeah. That's where I would turn to a BI tool. Like we use a BI tool internally. I don't want to name names and promote anyone, but that's the best. We have an IT department, works with our CFO. We pull all the information into one spot, and then all of a sudden I can see, what's our cost to acquire $1 of recurring revenue, which is a combination of sales metrics and accounting metrics. And you have like, what's our recurring revenue per full-time employee? All of a sudden you're digging into HR systems, pulling in data from HR, looking at Salesforce, pulling in data from there. So yeah, to your point, there's information everywhere, and you got to pull it together somewhere. And our team's done an awesome job putting it into a BI tool. It's like we have so many people at the company are just able to access this dashboard, and you get a good sense of like, we have engineering metrics in there. There's everything. It's awesome.
Yeah. And I think that's the trend for a lot of other organizations, is getting to that standard, right? Is not a lock and say they've actually connected these systems and figured out a way to report on these different efficiency stats that are outside of your standard, maybe just financial or economic based ones. It's like, because knowing how much money you're making per FTE is a good thing to know. Helps you understand like how heavy your headcount is or not. Helps you benchmark yourself to other organizations that are comparable within your market, right? Mm-hmm. And that's a great thing for you to be able to use as a decision maker within the organization. Be like, and not just be like, well, it feels right,
yeah,
right? or tell the board, well, yeah, we're doing a really good job. It's like, well, I can actually prove that out now because we're combining data.
And I'm gonna do a little bit of an aside, but it is related to this. When you're a leader, you're talking to the company or your department, and you're going through metrics, data, things like that. Like, let's say you're the controller running your accounting department. You're looking at your time to close your books. Obviously, the FloQast bread and butter. Hopefully, you're in FloQast looking at a chart where it's going down every single month. We have fallen into a little bit of a trap at FloQast where we present the data and it's just like, here's all the data. Cool. When you're running a company or leading a team, just looking at data is not inspirational. I would highly recommend looping in stories behind the data, explaining what's going on, and just painting more of a picture around these numbers. Because it's not like you'll notice at our last all hands meeting, rather than just presenting data, we talked about win stories from the prior quarter. And it was like, you make it more real when there's a story behind it, and people get more emotionally invested in that metric. So I like the idea of showing the number, but then if the close went down, you'd be like, hey, shout out Stefan. One of the reasons it went down is because he got this done in 1 day instead of 2 days. So like, awesome job, congratulations. And then you start to understand why you're making that progress. Everyone feels better, get more bought in. I know, a little bit of an aside, just something I noticed we became guilty of at FloQast. Just like, look at the numbers. Everyone's an accountant, right? They get it. They like looking at the numbers, but no, it's not as emotionally appealing, and you're not going to get that culture going if you're only looking at numbers all day.
And the way I view accounting, and this is something I've talked about, on this podcast before in other areas, accounting is meant to be storytelling. What we're doing is we're telling a story using the financial impact of the organization.
Yeah.
So we're basing the story based off economic impact, but at the end of the day, we're telling a story of progress. Whether that progress is good or bad or indifferent, it doesn't matter, but we're telling a story. So when you go to report, it is incredibly important to know what the story was. It's not just about saying, here's your ad hoc report, good luck, God bless. It's about saying, hey, I pulled this report. This is what I'm noticing based off these type of trends, or these are the areas I think you need to look into. There's a deeper analysis to it. And you're really failing in your job as an accountant if you're not considering the story impact.
Yeah.
The financial story is so important. And I think what we're seeing is a progress of that financial story from just basic, maybe traditional financial metrics into a whole new subset of what I think will be considered financial metrics in 10 years. Like, I think a lot of things you're talking about when we talk about efficiency, whether that's like FTE per new dollar or just like, dollar spent for new sale dollar or whatever it is. I think my hard take, those will be considered actual reporting or like accounting numbers and figures in like the next 10 years.
Yep, I think you're right.
Just part of the standard, right?
I think we're there. We're halfway there. I think your prediction is spot on.
Yeah, they're non-GAAP now. I'm saying they won't be in the future. There'll be some ruling or disclosures like that. No, we're gonna standardize a few more of these into the codification in some capacity. I
really think that needs to happen. And for anyone listening, there's a lot of money to be made in creating certifications and standardizing things. Mm-hmm. In my opinion, there needs to be a GAAP equivalent for metrics, because there's so many earnings calls where they just talk about non-GAAP metrics. Mm-hmm. And in our world in SaaS, the amount of different ways people calculate things blows me away. Yep. This like churn is calculated 10 different ways by different companies. I've had arguments with our investors about how to calculate this, and it's like you can make arguments good, but someone needs to standardize it so we can actually have an apples to apples conversation.
Opinion, right?
Yep.
Like one investor's like, well, I have these number of portfolio companies doing this. Another one's going to say my portcos do this, and you're like, all right, well, okay, you're the bigger investor. Do I go with yours? It makes it really hard for you to decide.
Yeah. For us, ultimately, I had to keep asking, well, why do they do it that way? Why do they do it that way? And it was sort of based on the nuance of your business model. There are different ways for different companies to think about it. So it's like, it kind of does make sense. Like if you're a consumption-based monthly billing company, you probably think about churn a little differently than if you sign 3-year contracts.
Yep.
And get paid by check. Annually up front. So yeah, how do you think about those different factors?
B2B or B2C could have an impact, and and I think that's it's important nuance, but it goes back to how do we tell a consistent financial story if we have all these like non-GAAP metrics that people are using. So yeah, I agree. I think not only will it happen, it probably needs to happen. It'll be a question of when that happens within the FASB and the SEC kind of pushing that, but. I don't think that's going to be a 2025. I think that's going to be definitely off the table in 2025. Yeah. But I can see, changes within the next 4 years or even, depending on how administrations go, that can change. And it needs to, we're getting a lot of like interesting pushback there.
I legit developed a passion around this topic like about 6 or 7 years ago. I was like, someone's got to do this. I was like, if this FloQast thing doesn't work out, I'm gonna do this.
We now know.
So somebody, please do it.
Mike's next great business idea is
there is money to be made in being a certified SaaS metrics expert or whatever you want to call it. There can be something like that anyway.
Yeah. And then I think as we kind of look at financial transformation, and you brought up an excellent point that I kind of want to circle back to from a compliance point of view is. There's all these demands in the organization. When you go to budget, you say, okay, well, I can estimate what sales is going to be, and that helps us really estimate, here's our top line, here's maybe what our contribution margins are going to be to kind of like maintain that from an SG&A perspective. But then you have all these other things you need to do in the organization that are, have to have or more check the box functions, and compliance is traditionally seen as one of those. There's obviously like the legal requirements around it, regulation requirements around it. Some people have leveled that up to, risk mitigation or risk management within their companies and trying to say, well, we're not just going to look at the regulation of it that we have to do, but we also want to consider the actual risk is to the organization, because generally these regulations come by because someone failed to see the risk and it lost the public markets a lot of money. But, part of that is like, what are you doing or what's justifying the spend of the budget, right? And compliance is an area that I think has always really struggled because it's traditionally just seen as a cost center. Mm-hmm. It's a have-to-have cost center. But how do we really step beyond that and say, well, even if it's a cost center, doesn't mean it can't actually provide some kind of ROA or ROI on the investment? And looking at the compliance program more strategically. So this is something we've kind of taken deep consideration in FloQast, but what is your take on, compliance more as a strategic asset to the organization or a strategic, function to the organization versus people that just look at it from a mitigation or a legal requirement point of view?
Well, I view it as a legal requirement, and then we want to be good at whatever we do in the compliance side, obviously. At FloQast, like this is what we do, so we want to be great and not have any issues around compliance. And we're so good about it that it's like, okay, yeah, how do we take this and go on offense with it? And it's to the point where we feel like these are things we can use in sales cycles, and that is if compliance is helping us book more revenue, I don't know if it gets much more strategic than that from a compliance perspective.
You linked it straight to your top line.
Yeah, we're here to grow. That's what it's about. And if you're able to ensure we are compliant with all these reports that make our customers happy, ensure they're getting through audits, make them feel good about stuff, and it's able to be used as a tool to help us close more business up front, like that's a beautiful thing. And I'm happy to pay for that. But I think we're able to do that because we've over-invested in that relative to other companies, right? We're not like we have more compliance reports than almost every company our size, and it's because our general counsel and our compliance team are a little psychotic and are like always 2 years ahead of something.
I always thought that about Eric. Every time I look at him, a little crazy.
Yeah, he doesn't listen to this, so we'll be good. I can say whatever. So, but I mean, they're like very far ahead of all these things, and the line that Eric had. We were at one offsite one time, and we're like, "Why are you so ahead on these things?" He's like, I've paved the road before you can even dream that it's happened.
Yeah. I'm thinking about it before you're even there.
And he was like, and I mean, he was not wrong. He was like, all right, we were already compliant in Germany and we were about ready to go into Germany. And so it was fascinating. But yeah, we use it as a weapon. I think it's because we invest in it and have a different mentality around it. And this is another thing that I've been processing a lot. Our compliance solution, it does very well in Europe. And it's sort of like, why does it do well in Europe? Well, in general, I'm going to stereotype, but in Europe, there's a greater appreciation for compliance and regulation. In the United States, we're more of a cold-blooded capitalist society where anything that gets in the way of driving profit is a necessary evil.
Questionable, yeah.
Necessarily been questionable. And so I think there's actually a bit of like a mentality shift that has to happen around it. And I don't know if that's possible because like literally we were founded on the notion of don't regulate me.
Yes. Yeah.
And we're going to use capitalism to grow this country. Like it's not in the foundation of our country.
Yeah. And that's true. Like it really is in our blood to pursue new paths and not necessarily get held back by, hey, tradition or something else. And the EU bloc tends to definitely lean into compliance and form a little bit more than we do. But I think you brought up a couple of interesting points I want to dissect. The first one being that, not like when you think about making your compliance function strategic to the organization, you can literally tie it to your sales cycle. You're able to, I don't know if you can put, and maybe you can, but can you put sales dollars to, or sales growth to the compliance function and say, because we have, ISO this, SOC 2 this, we actually have won these deals that we would have lost?
It's very difficult to quantify that. It's hard to be like, we lost that deal. It's very easy to say we lost that deal because we didn't have that. That is very easy to quantify. It's hard to say we won this deal because of that report. The reason you win a new logo.
You can find the negative, but you can't link it to like the affirmative.
It's the reason you win a deal is a lot of different things coming together. It's your brand, it's your product, your customer support, like just the compliance, price. There's so much that goes into it it's hard to point to one single factor. But I know that it's not hurting us.
Right.
And it's kind of like, and I know how much we book on an annual basis. I know how much our ARR is. I know what we spend on the security function, the compliance function. I am happy to spend those dollars. I know in my gut, it pays for itself.
You're able to look at just what we have. It's like you're able to see even just a diminishment in, hey, we lost this because we didn't have ISO 3100 or whatever particular one an organization's looking for. And just seeing a decrease in those really will justify your spend going forward. Yeah. Right? Because you're like, well, if we look at our deals when we're booking deals of this size at, we'll say like this kind of like market size, right? Now we're booking more deals at a bigger size to a bigger market. If we were losing, we'll say 1% of deals back in the day because we didn't have a specific compliance, well, you can even just track that number and say, well, now we're losing 0.1 without it. And that's just growth from it.
I like that. That's a much better way to think about it. It's as you bring in these new compliance certifications, what market does that open up for you? That's a super smart way of thinking about it. Yeah. Because I remember in 2015, we don't have our SOC 2 report. And there's so many companies where that's just a non-starter because that's in their market. So now I could quantify like, okay, now that we have a SOC 2, we can attack this larger market that is worth X billion dollars.
Yeah, bigger TAM.
Thank you so much, compliance team. I'm very excited we get to attack another few billion in market here.
And that's your ability to tie it to a top line number and actually like, whether that's, market size or market growth or however you want to see that. And your compliance function can do that for you. It's just a matter of considering it in that capacity. Or even if you look at your customers, it's, your point of it'll make customers also just feel, have more warm fuzzies during the sales process. So you're like, listen, I have all these compliance reports that I satisfy and there's no findings, right? So like, I think we just had our SOC 2 come back out again.
We just had another no finding report.
Yeah, we had a no finding, which is from an honor perspective is wild because you always scroll down to the end and be like, all right, what's lurking in the background here that I got to be afraid of because they're gonna say we rely on these 18 controls and I'm gonna find out 8 of them are questionable at best. Yeah. But it lets you go through that process and say, okay, I know this company's on the up and up. Just as investors look at audited financial statements to say, yeah, I know they're not just blowing smoke. So I think that's a great thing to do. The other thing you pointed out in compliance that I also thought was kind of interesting wasn't just like growing the market, but also paving the road to like essentially prevent you from having a stagnant growth within a market, right? So one was you opened up this new market for me in the US by having the SOC report out. But then from Eric kind of laying the groundwork for you to enter in Germany when you were ready is another way to look at it, saying I didn't have anything holding me back to get there because the team was linked to the strategic goal of the organization. The strategic goal is to grow internationally. And compliance being proactive in that and being linked to that is then able to make sure that you have no hiccups along the way.
Yeah.
As one of many things you need to consider, right? There's a lot of other things from that perspective. And that's another important thing of thinking about when you build out your compliance program and linking it back.
Yeah, because anything compliance related that makes a new market or territory a non-starter, you shouldn't put any go-to-market resources until you've solidified that. So yeah, why would we hire any sales reps in Germany until the data center is sorted out? We're feeling good about GDPR, like all those things are taken care of, and that's what the compliance team does. This is very cool. People are watching FloQast strategy develop in real time. I'm about to go to our compliance team and say, hey, can you look through all the reports and let me know what TAM this would unlock, and let's look at doing more of these compliance requirements. Like literally on this podcast, people are getting to see our strategy develop in real time.
And,
all right, cool.
And that's us, saying this is how we're going to link it going forward. So knowing that, when you look at future proofing your compliance organization and making sure, FloQast compliance, not our awesome tool, but our team internally maintains kind of this future proof state. What are you thinking about? Or like, what are your goals for Eric and his team?
Well, for now, it's going to be ongoing compliance with everything we have in place right now. Table stakes, we got to keep that going. And then as we look at new ones, it's going to be a combination of what is a requirement based on what we want to accomplish as a company. But now I'm going to go and be like, hey, I know ITAR is one that we've kicked around. Yeah. I have no idea what the market opportunity with ITAR is. I've just always viewed it as absurd, but somebody does. Vicky can figure it out. If Vicky comes to me and she's like, I think we can close another 1,000 accounts and this is worth $1 billion. Like, great. Yes, Vicky, go. ITAR, whatever. Let's do it. Yeah.
Vicky's going to hear this and say, I shouldn't tell Mike I'm really busy. She's going to bury the lead. She's like, none, Mike, none at all.
No, none at all.
I have too much to do.
No, Vicky's the happiest compliance person I've ever met in my life. I think she would love it.
Yeah. And then when you look at, kind of the future of, we spent a lot of time talking about compliance and everything else. I want to kind of go back to some of our ideas on AI and a few of the things we're kind of leading to in the beginning. So 2024, so obviously AI came out before 2024 and generative AI was out before 2024. But what I think is really interesting about 2024 is when we look even 2 years ago at 23 and when it really started hitting maybe early adopters when it comes to generative AI, a lot of people were exploring it, but not deploying it, I should say, right? So organizations might have a CFO or a CIO or some maybe, development representative or whoever it was looking at, well, what's generative AI mean for us? What can this do for the organization? To within 2024, almost 50% of organizations had deployed specifically new generative AI tools to some degree.
Yep.
And that stat, I believe, comes from Gartner, something we got from Gartner. And so you saw this really rapid deployment of the tool, which means a really rapid kind of, inflation of expectations. And then as we know, like I think it's a Moore's law or something like that. Gartner calls it their hype cycle, but right. It's a Moore's law is the guy who actually came up with it a long time ago, is you get this really big increase in expectations from it. And then you hit that peak kind of, I guess this peak kind of desire of what you think is going to happen. And then it drops down into this like trough of what disillusionment is who someone out there calls it, some clever name. But essentially it's like, hey, I think it's going to do all this great stuff. And then I start using it and it can't quite deploy what I'm thinking. And we're starting to see even within the news cycles where it's like last year, a lot of news articles from, even the Wall Street Journal is, hey, generative AI is coming out after your white collar job. To a lot of them are saying, it's maybe not all it's cracked out to be. What is your take on where we're at with generative AI? Is it going to take jobs? Is it all it's cracked out to be? Or what's your point of view?
More in the middle, I guess, at this point. I think one of the things from last year, you'd see a lot of press releases of companies talking about how much they've deployed Gen AI and they're automating stuff and all this. Marketing can be a little misleading. And my general take is if you dig under the hood of that, that's marketing to investors to flag that you're a more efficient company, and as such, you should buy shares in my company.
Yes.
So that I think that's the real. Like, why else would you put out a press release around we've automated X number of jobs or whatever, or we're going to do this without hiring anybody? So I think the number of 50% that Gartner's getting, it might not be accurate, or it might be accurate. That doesn't mean it's an impactful amount of technology being used. Like, sure, you've adopted it. Everyone has Copilot. Just enable Copilot. We're using Gen AI now. This is whatever. Are people actually doing it on a day-to-day basis? So I don't know how real that is. I have a hard time, but I know that there's less than 50% actually using it in a meaningful way. It's not higher than that. What I've seen is I still think it's still early. Like, people are working with it. They're going to figure it out. There are different use cases for it. I think it's very department specific and task and workflow specific. And ultimately, it's going to drive a lot of automation. I think it depends on different departments, and I'm focused on accounting, and like, we need it. So I'm hopeful and bullish, and we're going to be working on it.
I think there's any area that there's a true market vacuum, you're really going to see generative AI blossom. It has a green field to grow, right? And accounting is one of those. That's
where the pull is going to be.
Yeah.
So humans are naturally, can be resistant to new technology, and if you're in a field where there's already a talent gap, you're just more likely to be like, I need help. Yeah, like, bring in whatever.
Yep.
If you're in a field that's oversaturated where it's hard to find a job, you're not going to want to pull in tools that automate your job for fear of not being able to find another job. Like, we should just embrace human psychology, and that makes perfect sense. So the adoption is going to be different department by department. And that's one where I think a lot of these are going to have to be like top-down mandates for the departments where it's easy to hire people.
But you see a lot of these top-down mandates fall flat then, right? Because there is the resistance. So there's going to be this cultural resistance to this top-down, mandate in the first place.
Well, it's like, if you're at a Fortune 500 company, how many levels are there between the CIO and the person doing the work?
Yeah.
And at every organization, as information gets filtered up, the bad stuff is left out. So the CIO is probably sitting there being like, we're going to automate everything. And then you go down to the staff accountant doing it. They're like, this is not working for me at all, kind of thing. And so, I do wonder how effective it's actually going to be, but eventually it'll get there. I just have a hard time predicting the time frame.
Yeah. I think, I would actually challenge it. And I think it's going to be more eminent than we think that it'll have a big impact, especially in accounting. I don't want to toot FloQast horn more than anybody else, but I think there's a maturity model in adopting of AI, right? There's real basic, non-contextual LLM you can apply. There's almost like a semi to a true contextual LLM. And I think a lot of people are so focused in that non-contextual deployment of LLM where it's like, well, it doesn't really have any of the information. I just use it to maybe make my team slightly more efficient in their day-to-day. So for instance, like Copilot, or even just using it to help me write, right? Even as an accountant, you have to do a lot of writing. There's a lot of emails, or in my role, it's like I got to do LinkedIn posts, which is something I never used to do, right? And so hopefully, sometimes it's nice to use it to just, as a creative whiteboard to kind of see what sticks and what makes sense and have it come out in a bunch of different ways. And, so a lot of people use it in this non-contextual lens, or where they have to like apply just a lot of contextual writing in the moment, and then it doesn't really do anything from there. And then there's the contextual side, which is a level up from there, which is it has some understanding of the organization. And this is where old AI, I shouldn't say old, but like more legacy use of AI, like machine learning, has always failed, is it can't apply contextual learning because the context of my organization is so infinitesimally small data set to the data set it used to learn. It doesn't care. It just is. It is just removed in the wash cycle. Where generative AI, you can actually have it learn and apply that contextual understanding like day to day. So that's like the level up. And I think, or a lot of organizations out there look at themselves and they say, oh, if I'm using it for contextual application, that's really good. And I'd actually argue it's not. I think that's still pretty low on the maturity model. I think where we look at it, and we look at it from like a workflow builder, a developer, so to speak, point of view, that's a level up from that. And I think there's even levels beyond that we don't have, vision on yet. And I would say even internally we have developed, or we're looking at a step beyond that as well. Those are the steps that I think are going to start coming through in 2025. Because if no one else is going to talk about it, we're going to talk about it at FloQast. Like, that's something that we'll bring to market regardless of anybody else. And so I think the way I look at it is like, I do think you're right where there's a lot of top-down mandates that are going to come through. There's going to be resistance in some fields and not others. And so we're going to see a dip or a disillusionment in the technology. But I actually think that we're uniquely primed to bypass that and get straight into productivity if we look at that maturity model, and if people start thinking about like what I'm telling you about FloQast and developing of AI, you can use that for any tool. Like as far as like if you're assessing technology use at your organization, you should expect them to do what FloQast does. I'm going to say they probably can't, but you should at least have the expectation that any vendor should be trying in that regard. And that should be one of your criteria is like, is this a partner I want to work with or not? Because are they looking at this in a more robust maturity model than this limited contextual understanding? So that's kind of my hot take for 2025 in AI.
Yep.
That'll be really cool. And again, I don't want to just like have people just, oh, well, he's just really hot on FloQast, which I am. But there is some cool ways to use AI that are really going to shine in the marketplace this year, I think.
Yeah, that's been an interesting learning. So like we have 4 different products that have AI throughout them. And it's the opportunity that that LLMs being available has created is fascinating. And there's all kinds of different ways to take that technology and apply it to ultimately automating work.
And true automation.
AI is a tool for automation. And so, but there are other tools for automation as well. And there are different clever ways you can use various forms of artificial intelligence to drive automation. And so that to me is going to be the big one in 25. I pretty much agree with your prediction. Like I think this will be the year where we start to see meaningful uses of it. And it's going to not be in the world where it's like, throw all of GAAP rules into ChatGPT and then it can just do accounting. That's not how it is. You need to be more thinking from the lens of the professional you're selling to and how can we use AI to make their job better and automate that work. And that's where like, I think because of our knowledge in the space and being accountants, we've been able to do a really good job with that.
Well, we've always been focused on the user, right? A lot of companies fail to think about the user. They think about the process and it falls apart. I mean, a lot of ERPs struggle to do just basic depreciation because they think about the process. They don't think about the user and how it's supposed to be done. And, I won't go into detail, but it's like essentially if you try to extend the useful life or extend the value or like increase the value of an asset, most ERPs actually can't do that. Like the calculation will come out wrong afterwards. And what happens is you either have to buy a more advanced module from the ERP or you have to buy a specialized solution to fix that for you.
Or you have to book a bunch of topside adjustments too.
Yeah,
play it out.
Why not? I mean, it's the best.
What's another one?
Yeah, and I think you bring up just an excellent point I want to highlight, which is focusing on the user and the uniqueness of how they want to solve the problem is where you'll make or break the success in automation versus focusing on the process of it. That's where a lot of people just fail is they focus on the process and not the user and their desires and outcomes. They just say, well, you said you wanted X. It doesn't matter how I get there. I have to get X. And it's kind of like, I don't know if anybody else has had this experience, but I've had a lot of exams in my life where it's like solve for whatever, right? And I go in and I solve it in my weird way because I probably wasn't paying attention in class and I'm smart enough I could figure it out, right? And then you get there and the teacher's like, I give you half points. You're like, yeah, but I solved for it. And then I was like, is that not the answer? They're like, it's a answer. It's an answer that you could have used, but I wanted you to solve it the way I showed it in class. And so you get docked points and it's like always a hair pulling frustrating moment. But that's what technology does. Technology wasn't listening. It just tries like, well, you just said I need to get to this answer. You didn't say how I had to get there.
Yeah.
And the point is you had to get there the way people want you to. So I do think that's a really important thing for people to think about in 2025. When you go to adopt AI, are you using it in the way your boots on the ground want to use it? That their managers want to use it, that their, whoever they're sending the data or information to wants to use it. And if you are, you're going to have successful adoption. If you're not, you're more than likely going to have an unsuccessful adoption.
Yep. This is such a fascinating, unique B2B problem. Why in the world is most software for enterprises built for process and business and not for the user?
Yeah.
B2C companies aren't doing that.
No.
And I don't know. It's weird.
Well,
Whatever.
I think part of it is, they're trying to solve a mass amount of problems for the business all in one, right? Where a lot of consumers are trying to solve an isolated problem, right? And I think the other thing is,
No, that's definitely it.
Yeah.
But they forget that a business is a collection of people.
Yeah. It's a collection of people and like unique processes.
Yeah.
Right. So it's like, even though we all have to report GAAP, the way we go about it, it can be drastically different. And it's like in the way we all try to recognize revenue is going to be different because we're all going to set up our contracts differently. And we're all thinking about different ways of growing the market and obtaining new clients, which means we have different ways of attacking that revenue growth. So there's like all this nuance that happens, and we try to standardize as best as possible with accounting. But there's a certain amount of uniqueness, and technology in the past has just been so focused on, if I create this rigid path, everybody has to follow this path. And I think we're finally get to a place where technology is looking at it and say, no, I need to allow for uniqueness. That's what we try to do at FloQast. We allow for your uniqueness. And it's so incredibly, and I can say this as someone that's had to purchase many technologies as a controller. It is so refreshing to have something that focuses on the uniqueness and the way you want to do it versus the other. And people shouldn't lose sight of that with AI, right? Like, you should still try to deploy it in a way that allows you to be unique for your organization. And I will say this, if you want to learn more about this stuff with AI, I mean, we have a few predictions we've laid out for you here as far as what we think is really going to pop this year. And a lot of that's going to be in this maturity model and new use cases. But you really should check out some of our other content in this space that talks in a much more deep, like Colin, our CTO, talks in a lot more detail on specifically how the AI is used, what the new cases are, what the difference is. That'll give you a lot better contextual understanding of it.
Yep.
I always have a good time like chatting with him and being like, oh, what am I gonna learn today?
Yep. Yeah, totally.
So
like, he gets it, man. It's really impressive.
Yeah. And he, I think what I appreciate about him most is he knows how to communicate it back to an accountant. Right. Like, there's so many times, I feel like I'm very tech savvy. I've worked with a lot of IT departments, and the things that come out of their mouth sometimes, like, yeah, maybe someone else in IT would understand what you're saying right now, but right now I'm just hearing a lot of gibberish. And I feel like, you talk to Colin, and he's just worked with you and Chris enough that he's like, I know how I need to say this for you to get it.
I didn't want to take credit for it, but I do get credit for that. He's had to learn how to teach it to a 5-year-old for the last 10 years.
Explain it like I'm 5.
Exactly. There's so many times early on where I had to be like, Colin, I don't know what you're talking about. Can you simplify that for me? And now he can speak to accountants.
Yeah, you slide the crayons and paper across the table. And you're like, I need you to restart.
It was bad early, man. I've definitely learned what the word abstraction means in engineering speak over the years.
Yeah, definitely pick up a few things. Any other big call outs on AI?
I think another one is that in 2024, there was this proliferation of point solutions.
Yes.
A bunch of AI tech that does very, very specific things. And what I'm noticing is then the platforms are rolling out that as a feature. And so I think, particularly within the venture world, this is an interesting thing I'm talking to VCs about, is like, there's so many of these companies that can go from zero to, call it, a couple million in ARR really quickly. And then a bigger platform embeds that, everyone churns off of it. That company all of a sudden goes to zero, like overnight. So I think there's going to be a really big hype cycle within the VC world. But what I've noticed is they're way more cautious after the crypto crash back in the day and all the stuff that was going on. There's a lot of resistance around like, oh, what's this founder doing? Why are they raising money right now? Like, they're taking advantage of it. And I know we've done this at FloQast. We've bought a lot of solutions. You sign a 1-year contract because you're assuming one of your platforms is going to roll it out. It's great. You get value for 12 months. Then you cancel it. Oh, it's in Salesforce now. And that's where you go. So I think there's been this, the tech world, we always move back and forth between best in breed and platform.
Yes.
And it was best in breed for a while. Then you hit into a recessionary mode. It becomes platform.
Yep.
And then AI comes around, and all of a sudden it's like best of breed is where we've been. And now it's going to reconsolidate back to best of breed and then ultimately to platform as well. So we're in this weird kind of shifting mode of what's the breadth of our technology that we're using.
I think it's an excellent point, right? It's the bigger generative AI tools are going to look to consolidate a lot of that use case, because they've been so busy just building the models that all these other tools have been, kind of building the foundation of their tool on, that eventually it'll be like, all right, well, it's really expensive every time, and it's increasingly expensive to deploy new models within AI. They're going to slow that down, and they're going to start consolidating the field a little bit, right? So we have a highly segmented AI marketplace, and we're going to start seeing a lot more consolidation in that space.
I think ultimately this is going to be yet another example of the rich getting richer.
Yeah.
Like they're going to be a bunch of cool go-to-market tools to get fired up, and then Salesforce is going to embed them in their platform. Salesforce is going to make all the money off of it, and they're going to become an even more valuable company.
Yeah.
Like Salesforce, Workday, and ServiceNow, I would predict, are about to have a great decade ahead of them because they have the customer base, they have the platform, and they have the resources to build all the AI technology. So they're either going to go on an M&A spree and buy some of these smaller companies, or just build their own stuff and put those companies out of business.
Yeah. Well, and I have a feeling it's going to start M&A early on. To our point earlier is people are expecting, and I think there's a lot of good market information out there to suggest that, we should have a good IPO year here in 2025.
Yeah. Well,
but you're going to have a spree of M&As up until the point that IPOs really take off.
Yeah.
And you see a strong enough hold in valuation in IPOs that people want to lay off M&A and transition to IPO.
Yeah, there's been so much, the prior administration was shutting down a lot of M&A, and so it's just been a really cool M&A, like soft M&A market for the last administration. This one obviously feels different about it, and so I think there's been a lot of just investor hesitancy to even consider doing strategic deals over the last 4 years, whereas now that's not going to be there. There's more bullishness around an IPO market opening up. So yeah, there's going to be just a lot more transactions occurring in 2025 would be one of the broader like business predictions.
And I think regardless, you're going to see as an accountant, or whether you're a CFO, controller, or even a staff, you're just going to see a desire for preparation to ride a wave coming along. So I'm thinking back to like even like 2010, a lot of organizations just wanted to be able to strike when there was an opportunity. So they got IPO ready.
Yeah.
So they were transaction ready, doing all the work well before they ever transacted. And I think what we've seen in the last probably decade is investors have realized that, IPO valuations kind of come in waves. We had a bit of a weird time in 2021, right? But usually you just see like, waves that kind of pop up, and you can either hit that wave and ride it out and get the valuation, or you're going to wait and try and catch the next one as it builds. And that's a little bit of what they're doing with the marketplace. And so I think there's going to be a big prep in 2025 for a lot of transactions. So if your organization hasn't yet, and you think they want to transact in 25 or 26, be prepared that they're going to knock on, they're going to have a meeting on your calendar one day that they're going to want to have quiet news. The best known secret, we want to go IPO, right? Like everybody's like, you can't tell everybody, and immediately the whole town knows.
Yep.
So I would expect a lot of that to happen.
I could not agree more.
So want to go over a couple key takeaways from what we were talking about today. I think the first one was really on the talent crisis that's going on in the profession. You talked about leveling up, looking for swimmers, non-accountants that you can train and upskill, or even, maybe they do have an accounting background on your team, but can you upskill them? Maybe they didn't consider doing 150 hours because, that was just like not an opportunity for them with their lifestyle or whatever. And now if you're a CPA, you might be able to actually get them that 2-year mark, depending on what goes on, and the 4,000 hours based off work they've already done. And you might be able to upskill them to be a technical staff. So that's one way to solve that solution.
Can I just add on to that? I think one thing we forgot to kind of add on to that conversation was you talked about the analysis, and we're short 160,000 today. We played that out over the next 10 years.
Right.
That's when I got really freaked out, because we're just going to have fewer accountants in 10 years than we have today. We all agree. We hope the economy goes up and there's more demand for accounting at large. So that we've talked about this for a while, but I'm now in like full on freak out mode about it because of that chart. So I guess thank you for putting that together. Maybe not thank you for putting it together.
When you put an account,
great work, but I'm terrified.
When you put an account on a marketing team, you might actually get some interesting stats
there
out
you
of
go.
it.
It is. It's interesting and terrifying all at the same time. Yep.
And I don't want to spend too much time on it, but the idea is even if you maintain a 4% growth within accounting demand, we are in 10 years looking at I think a $600K deficit, because we estimate we need about 1.2 million technical staff in the U.S. Yet we would have, actually I think it's an even greater deficit, because I think at that point in time we'd have only 300,000. It's
an 800,000 FTE deficit.
Yeah, which is wild. And so big vacuum, market vacuum, big opportunity. But you need to think about that really carefully, because that's not far along. That's very soon. And even if you held that 4%, you put it at 0, because everybody's retiring, you're still going to have a massive deficit. So regardless, you end up in a real bad place.
Yeah. 2014 wasn't that long ago.
No.
2034 is not that far away.
No. I mean, it's when I was younger, that'd feel different, but at this stage of my life, it feels real close.
I'm more mature now. I know the days go by slow, but the years go by fast.
That's right. But
shout out to my grandma for that.
That's a good quote.
Yeah.
But then the other thing you need to do is look at technology to fill that vacuum, because you can't throw any more human capital at it. There's only so much upskilling you can do, and that deficit is coming now. It's here, so you need to fill it with something else, and really you're just left with technology. When we look at the transition of the CFO to financial transformation, I think a couple of our key takeaways there is, investors are pushing for this, and we're seeing companies being rewarded when they take on this transformation.
And it's about CFOs not just reporting on those metrics, but owning, improving those metrics as well,
and telling the story. Right,
yeah, telling the story.
The story is so important, and we see that time and time again. So don't forget that aspect of financial storytelling being really a big thing that you have to invest in. And again, Mike brought up a lot of points here. It's combining with other data within the organization and looking at other efficiency scores. That Mike's hard stance, which I love, are these will be not only GAAP metrics, but they have to be GAAP metrics in the next 10 years. So think about that internally as your organization, is how important these are and how do you tell the story around them and keep them consistent. We talked about compliance, right? And how it really should be, organizations and their investors, their boards are looking for every spend to be some kind of return. And that means departments like compliance that are traditionally cost centers need to figure out how to tie themselves to the top line. Mike gave great examples about how FloQast does it, and then we kind of determined strategy on the fly of, well, we're now going to look at what kind of market it can open up for you, right?
Yeah, to be clear, that's not how we have done it historically.
Right.
Now we are going to.
Yeah.
I'm very excited about this podcast and this learning. So
yeah,
we get to do another TAM analysis.
That's right. Well, but that's as simple as it is, right? It's like a lot of times when someone says, well, how do I get an ROI? And people pull their hair on like, well, we're a cost center. That's where it's like, it took us, 5 minutes to figure that out. Mm-hmm. So it can be as simple as that. Not to say it's not a lot of work to kind of get it done, but you can link the strategy that easily and you should be thinking about that not just from your compliance team, but anything that's a cost center. How do you link it back? Mm-hmm. How do you link it back?
And there's two forms of compliance. I would say there's the required and then the proactive.
Yep.
And that's the one
we're talking proactive.
Like, we're talking proactive because Sarbanes-Oxley, if you're public, like, do it. You got to do it. Whatever. Mm-hmm. It is what it is. But yeah, something like ITAR, very optional for most companies. Mm-hmm. But if we want to sell to a company that builds rockets, FloQast needs to be ITAR compliant so we can sell to a company that builds rockets.
Yeah,
I think. Mm-hmm.
And if you're the only person that has it, you become the market.
Beautiful advantage. Gosh, we might be embarking on an ITAR compliance exercise here. I wonder what that's like.
I'm sorry, Vicky.
My prediction for Vicky is going to be a big year.
Big year for Vicky, guys. Yeah. She doesn't know it yet, but she will. And then we were talking about AI and kind of like not only its uniqueness and what it can do for you, but some ways you should assess it, right? And what it should do for your organization. And if it's not, you should have a hard question on, is this a vendor I want to work with or not? And we talked about how we really think this is going to be an advent year for a maturity in the use cases of generative AI and what it can do for the organization. And I personally am really excited to see how that goes because, we internally have our vision, but it'll be interesting once the market really starts using that, where they'll take it from there. Because that's always something. It's like you kind of have a vision on the product and you put it out there and you think, oh, isn't that great? And they're like, yeah, but I'm going to do X, Y, and Z with it as well. You talk about that in our book that came out this year where, when you first had it, people started hacking it for compliance and you're like, I think we should maybe build compliance.
Yeah, I guarantee you that happens with all the AI tooling we have coming out. I guarantee you.
Yeah, and so we're going to see, I'm really excited to see what that is in 2025 because I think it'll happen this year that we'll start seeing that. So with that's our big predictions for 2025. Outside of Mike's like general sports predictions, which we don't share on here.
Nope, we don't. I will predict that people continue to be annoyed by the Dodgers.
Yeah, I don't think that's changing anytime soon.
No, that baseball subreddit is nasty. It's a nasty place if you're a Dodger fan. Not a fun place to spend some time.
I mean, but this year, it probably feels pretty good to sit there and be like, well, Who was proved right?
Yeah. We're pretty hated. It's quite the world right now. Yeah, everyone was happy when we were losing the playoffs, and then all of a sudden you win one World Series.
Yeah, exactly.
You win one full season World Series, and no one can slam on 2020 anymore. So yes,
it's heavy as the crown.
Yeah, what a Q4. What a Q4 last year. Gosh,
good year for Mike.
Yes.
So thank you for joining us on this episode of Blood, Sweat, and Balance Sheets. We hope you enjoyed it. If you have different predictions on what's going to happen, hit us up on LinkedIn. We're gonna have a lot of posts about this. We want to hear your thoughts. We want to know what you're thinking. So reach out to us, let us know, engage with us, because I'm always finding out new and interesting takes on this. Again, I want to know, whether that's AI or compliance or any of it. Drop us a line and let us know what you think.
Yeah. Awesome. Great job. I enjoyed this one.